Hi, I'm Max Keiser. This is the Keiser Report. I'm blowing the whistle on fiat money. Stacy.
Yes, that's what we've been doing here on Keiser Report for quite a while, and it's all coming to a head. You can see it in the financial news around the world. You can see it in the economic news around the world. You can see it in the geopolitical news for certain around the world. We have trade wars. By the way, you know what? Trump has tweeted that he has reached phase one of some sort of trade deal with China. Of course, this sort of on and off again has been going on for the past year on the so-called trade negotiations. But right now he says we have the greatest and the biggest deal ever made for our great patriot farmers in the history of our country.
Yeah, let's get Willie Nelson out. You know, he should be introducing this great farm deal. You know, sing our song, Willie Nelson, we got a farm deal with China. You know, something like that. Of course, they love soybeans over in China. They love it. They love soybeans with their little pork buns. That's why we're going to help them with our great agricultural products right here in the US of A.
So, well, we have that trade war. We also have the trade deal negotiations ongoing between Mexico, the United States, and Canada, the replacement for NAFTA. Mexico is trying to get it signed. They're eager for it to happen and pass. But this is part of the deglobalization, that is part of the de-dollarization, that is part of the last days of fiat. So these are what we're seeing. This is what we're seeing. This is a theme we've been noting for the past 10 years. It's not just under Trump, though. You know, with the hyper-partisanship in America, that is also part of this end of empire, end of the reign of the exorbitant privilege. I think the fact that the exorbitant privilege, whether they know it or not, they understand instinctively that it's coming to an end. The plunder and the spoils of empire are, the pie is shrinking, they feel, and that's why I think you're seeing sort of, you know, over the top. If you come to America, it is just a remarkable thing to watch the cable news here. It's just like people losing their minds.
Everything is a cycle. Everything's on an orbit. The planets, everything spins, and atoms that make up our universe, and the cosmos, it's all revolving around this enormous black hole. And business and monetary policies are also cyclical, and we have always a return to gold, and then people get rich and they think they're smarter than gold and they introduce paper money, and then paper money runs for a while, and then there's a huge collapse, as is the case or has been the case now every single instance for the past 300 years. Every single paper money scheme, the dollar, the yen, the euro, doesn't matter what it is, the drachma, the whatever, have all gone to zero without exception. And China and Russia, they look back and they say, you know what, it always comes back to gold. That's why for the past 10 years, they've been hoarding hundreds and hundreds and hundreds of tons of gold in preparation for this cyclical turn. And now that it's here and the music stops, and some countries won't be with a chair to sit on in this musical chairs game, and one of those countries is definitely Britain, but it looks like the U.S. will also be out of the game.
So we're going to get into gold in just one moment, because I want to talk about what the Dutch central bank, the Dutch National Bank, has said recently about gold, and that's really important. I do want to note also that in terms of the chaos on the global geopolitical and geoeconomic scene, which is an indicator that this whole fiat system as a unit of account that this experiment that we've been operating under for the past 50 years, that's coming to an end because, you know, we have Turkey, who is a NATO ally since 1951 or something like that. And Trump is saying that we're going to wage some sort of economic war the likes the world has never seen against them for, you know, the chaos we caused in Syria. So we see these alliances falling apart. This is part of the deglobalization. It's just an observation. You could see it for yourself. You could see the facts. You could apply all sorts of, like, you know, partisan sort of analysis to it, or you could just say this is exactly as it has happened throughout history. Now, of course, the Netherlands is one of these Northern European countries, one of the Central irresponsible countries, that is against all these bailouts of the Italians and the Greeks and all these, lazy, no good nicks in the south of Europe who require the 0% interest rates from the ECB. They were against the extension of this quantitative easing. And here is a report that the Dutch central bank just issued, and they say if the whole system collapses, the gold reserve can serve as collateral to start from scratch. So the Dutch central bank has just released a new report for the citizens of the Netherlands talking about the 615 tons of gold that the Dutch central bank holds and why they hold it. Because if the system collapses, I don't think it's a matter of if, it is collapsing, and they're saying that this will be used to reset and restart from scratch.
Right, the Dutch central bank is blowing the whistle on the fiat money system. It's blowing the whistle. It's telling the people in the Netherlands that the fiat money system is essentially reached its end game. You can't build a global economy if every single country has a different definition of what their unit of account is. And that's the problem since 1971, is every single country has decided that their currency is relatively valuable based on other currencies, but not against something that everyone agrees to be universally accepted as a unit of account, and that would be gold. So you have this Tower of Babel of the global economy, which you call geoeconomics, is become highly unstable. And as night follows day, every cycle repeats, we're now back to a fiat money collapse cycle and gold taking preeminence cycle. And I can only sympathize with Trump, who he should free Julian Assange, because they're both whistleblowers, aren't they? They've emerged as major whistleblowers here in the 21st century. He should free Assange, because now that he blew the whistle on some of these people, he knows what that feels like.
So, recently we reported that Mark Carney, who is the head of the Bank of England, he was here in the United States on U.S. soil in Wyoming at Jackson Hole, where all the central bankers of the world met just a month or so ago. And he said at that time that basically Keiser Report has been right. Keiser Report was right. He didn't mention our name, but I know he must be watching us, because he captured what we've been saying. So right is that the U.S. dollar is toast. He essentially said it cannot operate as a unit of account anymore. We need a stable, honest unit of account. He didn't mention that we should just return to gold, and that would be a sensible thing to do. But what he would suggest is that the IMF should issue a synthetic cryptocurrency, and that everybody can then know how much debt is there and how many units of account are actually there. And it avoids the situation of these global trade wars. The trade wars are a result of the exorbitant privilege of the United States. The corporations here don't need the workers. Why would you pay a worker any money when you could just get free goods from overseas? So these are the imbalances that erupt. The Chinese don't want to replace the U.S. dollar with their currency, because they don't want the same problems America has with the deplorable heartland, that Hillary Clinton would call the deplorables living there that used to have jobs. Here, the central bank issues stunning warning. According to the Zero Hedge headline, if the entire system collapses, gold will be needed to start over. So the Gold from DNB report wrote, quote, "If things go wrong, prices may fall," i.e. of their gold holdings, "but crisis or not, a gold bar always holds value. This makes it the opposite of shares, bonds, and other securities, all of which have inherent risk."
Right, there's no counterparty risk in gold. Gold is always gold. Right, but the problem with the IMF issuing some master currency is that you have the Cantillon effect, only now it's transferred from the Federal Reserve Bank to the IMF, right? So whoever gets that cryptocurrency or their IMF currency or the SDR allocation first will benefit at the expense of everyone else. So you can't really replace a problem with a similar problem. You have to replace the problem with the opposite of the problem. And the problem is fiat money, whose value is determined by economists who would go to excruciating lengths to avoid having to get real jobs, right? I mean, if there weren't Ben Bernanke or whomever, Janet Yellen or Jay Powell over there at the Fed, if they were forced suddenly to get a job, they have no qualifications to do absolutely anything except dig ditches, right? So they just don't know how to do anything. So they're going to avoid that extinction event at any cost.
Well, of course, the problem with not operating a fiat system, a global fiat system, and having a gold standard for global trade has always been that kings, emperors, whoever the superpower is, they want to force other nations to abide by what they want. And how they do that is bombs, attacks, war. And what happens then? They go bankrupt because war costs a lot of money. So of course, especially since 2000, because not only have we been off the gold standard since 1971, but we've also unleashed all the derivatives of the world which hide and mask all of our wars. All of our wars are essentially dumped into, since the Commodities Futures Modernization Act, since Glass-Steagall got rid of that, like the banks basically print our way into war. So we've been at non-stop war. Non-stop since 2001. We have never not been in a war. We have never not had a Syrian sort of situation, a Yemeni situation, a Somali situation, an Iraqi situation, an Afghanistan, Libya. We're at war non-stop. So again, at the end of the day, this is what the fiat system that they're trying to control, and they're trying to. That's why I think you're going to have a hyperinflation and wars. You're going to, because they're needed to mask all the debts of the previous war.
Right. So the value of life in a gold standard starts to go up. In a fiat money standard, if the price of money is zero or negative, and there's no way to value anything, including life, then wars become a simple push-button affair between countries who have no compunction about wiping out populations because it doesn't cost them anything because they just print more money. If you go back to a gold standard and to wipe out another country or to send a bunch of your young folks overseas to get murdered by another country, and you have to pay for it in gold, you're gonna maybe be hesitant to do that because the value of the life just went up.
And again, here, going back to this report from the Dutch National Bank and what they say about why they're holding the gold, according to the IMF's latest data, the DNB holds 615 tons, which is 15,000 bars of gold, mainly in Amsterdam, with other stores in the UK and North America. The value of the gold reserve is over 6 billion euros, calling gold the trust anchor. The article details briefly why the hard asset is so important to wealth building and the global economy, claiming gold is the trust anchor for the financial system. If the whole system collapses, the gold stock provides a collateral to start over. Gold gives confidence in the power of the central bank's balance sheet. So again, going back to this global war, as David Graeber in 5,000 Years of Debt would say, like any time we had so many wars as whatever empire at that time, and there have been dozens of them throughout history, they're always trying to force compliance and obedience from the edge of empire, and they're always having to print more money, basically, or clip their coins in order to devalue it, in order to pay for the ongoing wars, to extract not only resources, but obedience and compliance from these people. So here we have the same situation where they're suggesting that, we're at the end of trust. Nobody believes in this exorbitant privilege should be given to the empire at this moment.
Right. The banks don't trust each other. The countries don't trust each other.
That's what the repo market suggested, by the way, that the banks don't trust each other. Right.
So you're seeing already a reflection of that. Oh my God, we got to take a break. When we come back, much more coming away. Don't go away. Welcome back to the Keiser Report. I'm Max Keiser. Time now to turn to Michael Pento of PentoPort.com. Michael, welcome back.
Thank you, as always, for having me back on your program.
Yeah, we've got actually recently celebrating Columbus Day, and you had that DNA thing done?
I did.
You are.
I wonder how you knew about that.
You mentioned it, and you're, I believe, 94% Italian.
Yes. Do you know what part of Italy I am from?
Tell me.
Positano, Amalfi Coast.
In the Amalfi Coast?
Yes. Can we do the next show from the Amalfi Coast?
That's what I'm leading up to.
All right. All expenses paid by you and Stacy.
We're going to do the next show
Thank you.
in Italy, and because we're getting out of here, because this sucker's ready to blow.
Yeah.
This economy's ready to blow, because what I see, you tell me if I'm wrong, but this repo rate scandal to me looks like the pressure cooker's about to blow. With those repo rates are skyrocketing, usually that means, the trust amongst banks is collapsing,
Right.
Something's going on. We're hearing a lot of different rumors. I heard that the primary dealers were holding the central bank hostage. They wanted them to buy a lot of their long-term bonds, so they staged this fake crisis. What are you hearing there?
Well, gee, we could do a whole segment on the repo
We got time,
market.
Michael, before we head off to Italy, let's just do a couple of shows and then we'll be on the airplane.
So remember back in 2008, that was where the nucleus of the crisis was, that banks weren't trusting each other any longer because not only were they insolvent institutions, they were trying to hypothecate distressed assets to each other, okay? So think mortgage-backed securities.
Hypothecate means lending, lending and then relending, lending again.
Yes.
Right, it's over and over
Unsecured
again.
lending.
Okay. Unsecured lending.
This rate shot up over 10%, okay, from the shadow banks to the private banks. And I'm wondering why that occurred. Why do you think that happened? Because the assets they were trying to lend are supposedly money good. Treasuries. Max, treasuries. Here's the truth. There is a dearth of liquidity in the banking system. The Federal Reserve, through its quantitative tightening program, took away $800 billion of money and burned it in the incinerator. And because of Dodd-Frank, okay, and because of Basel III, banks do not have the liquidity, which begs the question, if the repo rate shot up above double digits for very good credit, what's going to happen when leveraged loans, CLOs, and junk bonds blow up? The entire banking system will freeze just like it did in 2008 and like it did in Q4 2018. It's going to be quick, it's going to be fast, and a very hard, deep freeze.
Okay, so this quantitative tightening, or QT, that it didn't last long. It seems like they tried it.
It ended, Max, 3 months ago. We ended QT. So for those of I don't know, any of your listeners who would think this, but for those who believe the Fed is omniscient or omnipotent or any omni you want to throw out there, they don't know what they're doing. They ended QT 3 months ago in July, and now we're back into QE. Did they mention that? I'm sorry. Don't call it QE because you'll offend Mr. Powell. Just call it $60 billion worth of money printing confetti every single month for the next 6 months at a minimum. But just don't call it QE because he don't like that word.
Right, and but this money doesn't go into the real economy. It gets hoarded by a few banks on Wall Street and others, and it doesn't really circulate. Because I noticed that the money velocity, that measure of money being circulating in the economy, which if you think that if they're printing all this money, that would go up, but in fact it's hitting new lows.
Right.
So how come it doesn't make it into the economy?
Because we have to consume a lot before we have to eschew fiat currency as a consumer and buy a lot of things and not let it circulate around the canyons of Wall Street. That's how you get velocity up, and then you get inflation up as well. That's what's coming. And that's the real problem, because once you get inflation up, what happens to real estate prices? What happens to the stock market? Because interest rates are going to absolutely become unglued.
Right. So they try to outlaw the business cycle and any kind of normal business cycle by manipulation. Now, Jamie Dimon over at J.P. Morgan, now he's Department of Justice is up in their grits because they caught them racketeering. So what you're describing there about not letting the money circulate, that requires the cooperation from all the pieces of the puzzle. It's not just one bad actor, in fact. It's all the money managers, the primary dealers, the central bank, the primary banks. They all have to collude in a racket, right?
Interesting word.
Am I right? I mean, that
wasn't a reference to Columbus Day, to collusion and racket.
No,
in any way.
I don't know how we got back to Columbus Day.
You mentioned racketeering and colluding, so
I mean, were you bringing up racketeering, collusion? I mean, I guess that's an oblique reference. We're talking about this Italian, DNA thing.
Tell me you're a little bit Italian.
Of all the movies that have come out over the decades, which one to you feel is the most glorious in terms of representing the zeitgeist and beauty that is the Italian culture here in America?
Of all the movies that came out? Well, any documentary about Leonardo da Vinci or Enrico Fermi. I mean, not the stuff that you see.
Not the crime stuff.
Not the crime stuff, no.
So Leonardo da Vinci, to me, to you, is the prototypical Italian.
Yes, absolutely.
He's the guy.
Leonardo da Vinci, absolutely.
Renaissance, boom.
The Renaissance man.
That's it.
Actually.
And you're an embodiment of that. You're the Leonardo da Vinci of Wall Street.
Thank you.
The way you approach your portfolios are like an artist. And here we are coming toward the close of the year. Yeah. And I know you've been exposed to gold during the year, so things must be looking fairly solid over there at Pento Portfolios.
Gold has done very well this year. Now, there was a slight sell-off to gold, which I predicted. So I sold all the gold in my portfolio about 2 weeks ago. Okay, and I did this because I knew that the showman that we have in the White House, and by the way, I voted for him, but he is a showman. Let's be honest. He was going to come up with a trade deal regardless of what the Chinese did. He needed one. Because look at the ISM figures that we had, manufacturing and service figures. Okay, the president is under an impeachment inquiry. Okay, so he needed to do this deal, and he came up with a deal that's about as vapid and vacant and fatuous as you can come up with. Okay, I mean, I wouldn't even be excited about this deal if I was a soybean, really. But I sold the gold because I knew it would be spun as the end of all conflagrations with China, and it is not.
So your job as a money manager sometimes is to play the players.
Yeah.
Right? You've got to see like how the propaganda works its way through the system and then play that, because you've got to look for absolute return. You can't be right but have underperformance. You need to perform, so you have to look at the meta game being played out there. But let me just jump to the Dutch central bank here, which owns talking about gold. They now own 615 tons of gold, and quote, they've said gold is the trust anchor for the financial system. If the whole system collapses, the gold stock provides a collateral to start all over again. This is something we're hearing from a lot of central banks
Russia,
now.
China.
They're telegraphing a collapse. They're telegraphing a move away from fiat. So what you just described was the noise from day to day. But from the longer-term trend, the central banks and serious money managers are looking at gold and building huge positions in gold, and sovereign wealth is buying gold. So here you have now the Dutch central bank joining this chorus of fiat money is toast, and we're going to go back to some kind of gold. Your thoughts on this?
Well, I mean, it marks the slow and steady decline of the U.S. dollar as the world's reserve currency. I mean, you think about dollar hegemony. One of the ways we get countries to comply with our will, as the United States will, is to cut them off of the SWIFT system, the international banking system. Well, if they don't trade their commodities in dollars, then who needs the dollar, right? So that's why we're having a move towards the ownership of gold and the digitization of gold. Okay?
Right.
Which is what one of the only things I ever loved about Bitcoin and cryptocurrencies was that you could back them with gold. And that's coming. And if you do that, and you could trade, China can trade with Russia, and Russia could trade with the EU, and you could avoid the dollar completely, that's the direction they're going.
Well,
they just don't trust the United States
they're gonna create,
and their sanctions.
They can do that.
Their ability to cut off their economy at will. Donald Trump recently said that he was going to, crush and obliterate the Turkish economy. How would he do that? Through dollar hegemony.
What you're saying is if the de-dollarization world that we're living in and the deglobalized world that we're living in, and there is a need to substitute dollars for gold, does make sense to come up with a ledger that is backed by gold. In the cases of these major companies, countries that want to reintroduce a gold standard, but it's cheaper for them to do it this way. It's a cheap version. All you need is a blockchain, and you can recreate the gold standard. Do you foresee that happening?
I do. I think it's en route and coming soon. The only thing holding back gold, which is illiquidity, and you solve all those problems by digitizing it on a block ledger.
Also, Alistair McLeod over at Gold Money recently thought that China is going to announce at one point, shockingly, that they have not been forthcoming and that they have between 10 and 20,000 tons of gold that they haven't mentioned, which this would be part and parcel of what you're saying. Have you heard anything along those lines, your comments?
It would not shock me at all if that was true. It would make a lot of sense. Chinese centrally planned government wants to get away from the hegemony of U.S., and that's exactly what they're going to do. And Russia, too. You can throw Russia in there.
They have willing partners. They have Russia, China. They have others. Who could do something like that. If that were the case, if that announcement were to cross the tape, you're just sitting at your desk, you're eating,
some form of Italian food.
A cannoli, for example, and you're like,
with a napkin, tucked under here. Lots of sauce going all over the place.
Gun right here. And you're like, China, what? They own 20,000 tons, right? What the dollar would be, what would happen to the dollar?
The dollar would go down and gold would go up.
Right, dollar would instantly vaporize before your very eyes.
By the way, I'm not as negative on the dollar, per se, against the euro or the pound or the yen. I'm more positive against a positive for gold against all fiat currency.
Right, it just made a new high against the euro.
Yeah, you know, you think
a new all-time high against the euro.
Exactly. Max, when you're now printing, this is according to the CBO. Okay, so we just breached above $1 trillion annual deficits. Okay, the CBO says that we're going to have an average of $1.2 trillion annual deficits as far as the eye can see, and that's the good news. If we have a recession in the next 10 years, that number skyrockets. If interest rates normalize, that number surges. Maybe $3 trillion per annum, okay, based upon what has happened before.
Are you saying that if that number...
deficits. That's 15% of GDP.
That number,
15% of GDP, Max.
If that number normalizes, and I want to talk about that.
Interest rates.
Okay, I want to talk about what that means, but we're going to carry this over to another segment. I know you're a busy guy, but hopefully you can maybe you're casual today, no tie, but I hope you can stay. Is that okay?
So I did buy you a new suit, though, so you know.
Because you already you got 1 foot on the Amalfi Coast. All right, that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacy. I would like to thank our guest, Michael Pento of PentoPort.com. If you want to reach us on Twitter, it's Keiser Report. Until next time, bye, y'all.